Good morning, everybody. And today we're talking about the JEPI or JEPI, JP Morgan Equity Premium Income ETF, and what the dividends are, and what you can potentially make in terms of cash flow, and specifically how you can get to $100 a day. How much would you need to get to that point? And we can look at the most recent dividends here: 0.3382, 0.2904, 0.3593. Going down the list, you have some higher dividends, 0.44. Some of these months, especially back in 2022, this was when the market was starting to get a little bit more volatile. You had more of that implied volatility. You had some months where you're getting 50, 60 cents in dividends. Okay, so depending on where this thing trades and also how much you're getting paid, you can kind of factor in the yield. According to this website, 7.34%. Now, the first thing we can do is take this yield of 7.34%. And we'll just go to, let's say, 500,000 times 0.0734. Kind of estimate how much this would be. And you have 36,000, which is going to be approximately, okay, let's go ahead and do the math on the monthly, equals, oh boy, whoops, not plus 12. So 36,700 divided by 12 equals $3,058 per month. So right about, I would say, $100 a day right there. So that's going to, if we go back to 365 days, so actually per day, you're getting exactly $100.54. So assuming that dividend yield, according to NASDAQ.com, assuming this remains the same, you're going to be getting $100 a day in dividends. So that's cool to think about. But now we can actually take a specific dollar amount and invest it at the current share price. So if we take, for example, the current share price is $54.95, we will go ahead and divide that by the same amount, $500,000. $54.95. This is assuming that you're, in retirement or you're approaching retirement and you've kind of built up a nest egg, let's say, or hypothetically, you have this much to invest. So we can buy 9,099 shares with that much. So almost, we'll just say 9,100 shares to make it even. And if we take a look at the most recent dividend of 0.3382, you can kind of factor in, about $3,000. You could also take a different dividend amount as 0.3382. And if we take, let's take a higher dividend amount, like the highest one is 0.6104. So you can see some months you'd be getting a pretty good amount, 0.6104, and you're going to be getting over $5,000 just from that month. And this is on a $500,000 portfolio. So depending on how you look at that, you might have been working all your life. You might have, had a good portfolio for a while, or you might have just come up into some money from an inheritance or something, and you're kind of looking at passive income options. Now you can run these same numbers in terms of, lower amounts. If you just wanted to earn like $1,000 a month or $500 a month. But the point is, this is kind of an estimate of how much you could potentially make. And let's say specifically you want to get to $100 a month. I would say, to be on the safe side, you're going to want to have about $500,000 into one of these ETFs. That's going to get you right around that $100 mark. Now, depending upon where you're at with this thing, if you have that much money to invest, you're going to see, like I said, some of these months are a lot higher than others. Some of them are lower. But on the lower end, you can kind of see how it went down to 29 cents. It looks like that's pretty much the lowest, besides down here, 25 cents. So beyond that, though, you're going to be getting some months higher dividends, and really that's going to be the benefit of an ETF like this, is those higher dividend yields. So if you did have that much to invest, then you can potentially make $100 per day, replace part or even all of your full-time job income. So that is something to keep in mind with cash flow, is that you're kind of just investing this into an asset for a return over the long run. It's a proven principle. Robert Kiyosaki talks about it with real estate. Now he uses debt. This is all digital, though. This is like, stock market type stuff. So you can always factor this in terms of what your own risk tolerance are, investing goals are, and what you're looking for. But with that being said, guys, thanks so much for tuning in, and we will see you in the next video. Take care.